Sam, hi, and welcome to this podcast we call Accelerate.
Accelerate.
All right. So, Sam, before we dive deep into anything, why don't you tell us very quickly about yourself?
Sure. So Sam McCone. I own McCone Properties. Grew up in Dubai. Moved here when I was 2. So Dubai is home for me, and I've been doing real estate since 2011. McCone Properties since 2013. So like to think that, especially considering most people who do real estate have only been here for a couple of years, like to think I'm somewhat of a veteran of the industry. But yeah, still learning, still exploring ways to improve our business and do more. And yeah, so always keen to catch up with other people in the industry as well.
That's great. So now, Sam, we know that Dubai real estate moves really fast, right? And even during crisis, we've had transactions, and we were just talking about this, and you've seen the transaction velocity and volume increasing once again.
Yeah.
Of course, it's not back to where it was, but I'm guessing it's headed there, right? And there, launches are still happening, investors are coming in, everything seems to be accelerating again to some extent. But here's the real question. Are people actually winning in this, or are they just moving fast?
What do you mean by winning?
So let's go to the moot point, the speed part of it. Do you think speed kills or speed wins?
I mean, I don't necessarily think, in certain instances, the ability to move quickly does matter a lot. But I think in Dubai real estate, sometimes people move too quickly and they don't actually ask the right questions, and they end up buying the wrong product. So I would say it's a balance between the two. You want to make sure that you've done all of your due diligence. You're really identifying the right project for you to buy, invest in, whatever it might be. And once you've really identified that, then you need to put yourself in a position where you can move quick.
Right.
So, but the mistake that a lot of people make is that, yes, they see that transactions happen so quickly in Dubai, that they jump to that second point too quickly. They just think, okay, if I can buy something quickly, then I'm an action taker and I'm going to make money no matter what. Well, that's not always the case, right? You have to really look at the track record of a developer, the credibility of the broker you're working with, the community that you're looking to invest in. There's so many variables that come into play that I don't think you can rush through those.
So too fast and you can crash and burn.
100%. And I always say this, Dubai is an amazing city to invest in, but there is a lot of bad investments to make in this city.
There's a lot of bad investments to make in this city. So that takes us to segment 1, which is the unfiltered real market.
Okay.
5 quick questions. What's the biggest illusion in Dubai real estate right now?
That everyone makes money.
Awesome. Second, who makes money today?
Developers.
And who only thinks they are?
So who makes money today? Look, the market has been great for the last 5 years. So most good businesses, be it developers or agencies or agents themselves, we've all made money, right? But obviously, like the way that I look at it is brokers sit at the bottom of the funnel. And as you kind of move up that funnel, the people naturally are making more money. Right. So an EMA is at the very top of that funnel. They're making a lot. What was the second question?
Who are the ones who only think they are making money? They're not really making money.
I would say
marketers like us.
I would say that a lot of the broker worlds, one of the things about real estate agents and agencies is that we get a lot of the press. Right, we're the ones that are on Instagram. You see us around, flashing cars, blah, blah, blah. So we seem to have the glamorous lifestyle, but the ones who are really making the money are the ones who, as I mentioned, the developers, right? And they get a lot less attention, but I think that their bank accounts are far larger. And I actually know an interesting story I know a developer, this is a bit bizarre. He bought a plot of land, he did a development, he made good money, right? 20 million, whatever it might have been. Then he did a second project, he made good money. Third project, he made good money. This guy then decided to open up a real estate brokerage company.
Really?
Yes. And he lost money, right? In the brokerage company, he thought he could throw money at it and he would have a successful business. Brokerage isn't about money as much. It's much more about the right kind of operations, being able to hire the right people, understanding where to put your focus and so on and so forth. And, he's now lost a few years of distraction, of not having focus as a developer. He's lost his position in the market as what was a reasonable developer. Of course, there's so many in Dubai,
Right.
but he spent that time, and I don't know why he did it, but what I believe was that he was chasing the accolades that you get as an agency.
Right.
Because I think agents and agencies, they get more of the attention. And I think for some people, it's just that human nature that they want the attention that comes with it.
Right. So that takes me to a very interesting point. So this was a crash and burn story. If today I gave you 5 million, where would you definitely not invest it?
Wow. I mean, I'm concerned about Ras Al Khaimah.
Okay.
I think Ras Al Khaimah has been really positioned as this sort of tourist destination, Airbnbs, that whole lifestyle. I think tourism is going to be the sector that is going to be the most hit for a while in Dubai, or let's say in the UAE. So naturally speaking, I think considering the casino handing over in a year's time, I think Ras Al Khaimah, which has been selling at price per square foot that's in many cases even higher than Dubai, the numbers don't make sense to me. I've always been a bit, and I know people have different perspective on that, but I wouldn't be rushing to invest in Ras Al Khaimah. Having said that, if I got a great offer, right, and a product really made sense because the developer maybe came in a different approach, I would reconsider that. But that would be one of them that I'd be quite cautious about.
I love the clarity. So, the Ras Al Khaimah story. Are we therefore in a momentum-driven market, or are we in a smart market?
No, 100% momentum.
Momentum. Okay.
Yeah.
And in this momentum-driven market, what one deal structure or trend are you seeing that you do not trust?
One deal structure.
Or one trend that is catching up, but you don't trust it?
I think one of the things that people have to be very, very cautious with is a lot of post-handover payment plans, and a lot of developers and agencies using that as justification for a higher price. I think we've seen a lot of instances where in the last couple of years, people have bought products in areas that have typically been trading at, let's say, 1,200 per square foot. Some developers have started to come in at 1,700 per square foot, but they've been justifying it by but we have a 3-year post-handover payment plan. We have all these amenities, blah, blah, blah. You have to look at it, and the reality is that area is trading at a certain price per square foot. For you to command an extra 30%, a payment plan is only going to last for so long, right? So eventually you're going to be fully paid on it. And so that for me is a little bit of a marketing gimmick that I think developers and agents use, which could come out and bite some of the investors if they've not really thought properly about it.
Okay, so basically you're saying that there is a gimmick in this payment plan piece.
Yeah, for me, one of the biggest issues with real estate in Dubai is that sometimes we don't focus on the product.
Right.
But we're not focused on the actual real estate. We're focused on the things that you wrap around the real estate. I like to call it the packaging. And it's a great tool that developers can do to entice buyers by packaging it in a really good way. But the reality is that if a product is not good, or if a product is overpriced, eventually that's going to come in and be the reality of the situation, no matter how well it's packaged. And we've seen this play out several times.
But don't blame the packaging too much, because you're sitting in one of the biggest packaging firms.
I know, and but that's the thing, right? And I think, we're in Dubai, we're all very good at being extremely creative, right? We come up with these payment plans or these guarantees or whatever you might want to call it. But eventually the market, you asked, is the city smarter? The market has to be smart. The market will dictate, and eventually that will catch up on everyone. So that's something that I would just advise investors be cautious with.
So since you talked about packaging, we'll now segue into the second segment.
Okay.
The second segment is called the game behind the game.
Okay.
Right? So being honest, see, when this crisis broke out, right?
Yeah.
We saw a lot of agents and we saw a lot of influencers saying, hey, this is a great time, everything's hunky-dory, nothing's changed, it's all the way it was, etc., right? The question that emanates from that is this demand real, or is part of it fabricated?
I can't speak for what other agencies are doing or saying, but there is demand in the market. It's a lot less than what it was in February, right? So the demand has definitely dropped off. And I think a lot of the international demand has dropped off drastically, right? So people who were in Europe, who were consistently buying in areas like Dubai Island, Ras Al Khaimah, like I just mentioned, that whole market is really on the sidelines, right? Again, for them, you know, if you're sitting in Europe and you're getting the press about Dubai, it's very, very difficult to then to buy. We are seeing some of those investors come back. So we have actually done a number of international sales over the last couple of weeks, which I think is an extremely positive side. Where the demand is today is in the local markets. Right. It's people who live here, people who maybe they don't live here, but they come here a lot. They're very, very familiar with the market. And a lot of that demand is people who have maybe been considering buying for a while, and they've realized that, okay, the fact that prices have dropped maybe 5, 10, 20%, they're seeing it as a good opportunity for them to finally get on the property ladder where they've maybe been priced out over the last couple of years. So there is definitely that demand. And a story that I can actually give of one of my peers in the industry. He owns a very successful real estate company that really focuses on townhouses and villas in up and coming areas. So not the expensive stuff that you see in, like, I don't know, Palm Jumeirah or Emirates Hills or anything like that, but more, you know, townhouses anywhere from like 3 to 5 million. I'd say that's like his bread and butter.
Right.
He had his best ever day of business this Monday that he's ever had in, I think, the 10 years that they've been open.
Because of domicile demand.
Exactly.
Yeah.
So all of a sudden you've got all of these townhouse buyers that have, you know, been maybe wanting to buy here for the last year or 18 months. And they've been looking at pricing, go, okay, it was at 5 million. Now all of a sudden they can pick it up for 4.5 or 4.3 or whatever that difference is. And that difference changes a lot depending on the community and the property type and so on. And so a lot of people go, okay, this is our chance, let's go and do it. And obviously, given the fact that he's had his best ever day, I think it's just super interesting. It really highlights that local demand is there. We as a business, we sell a lot more international. We haven't had our best ever day, right? So again, it's really, really telling for me.
So now, brokers, of course, are saying different things to different investors and buyers. What is something that brokers are saying that investors today should definitely question?
That, you know, God.
Tricky questions, huh?
Yeah, no, not the easiest ones. I think I would just say, look, I'm very, very optimistic about Dubai in the future. But the one thing that I don't think any of us can guarantee is how quickly we will bounce back.
Right.
I would love to be sat here in 6 months and say, yeah, we're back in a booming market again. But the reality of the situation is, A, there's the geopolitical situation, which is still not resolved. We still don't know what's going to happen.
Absolutely.
And B, even when that situation does resolve itself, we still don't know how long it's going to take for the market to fully kind of absorb the whole conflict and what's come of it. So I would just be very careful with people promising that prices will be 10, 20% higher once again in 6 to 12 months, because we don't have any sort of real insight into how that could possibly play out.
So that leads me to another open-ended question. So, you know, this whole 10, 20%, people then get into the flipping mode.
Yeah.
Do you think developers these days are also building to catch on to the flipping cycle, or are they still end user focused?
I mean, I honestly, the whole idea.
We have a lot of developers who are making like pocket-sized products, you know, to meet that ticket, and then so that their investor will flip and the broker story becomes more credible. Yeah. Do you think developers are going into that mindset, or they're still, very end user focused?
This whole idea of flipping, I don't see it. I honestly don't see it. I think there's been very few examples in the last 5 years where people have been able to buy off-plan property and flip it, right? Yes, there's been some instances,
right,
but I think the vast majority of off-plan property, people, you have to hold on to it until handover and then rent it out, maybe sell it again or whatever. But there's a few reasons why flipping can be very difficult. It's because let's imagine developer does a really great product, right? And it sells out. Fantastic. Well, you then have bought one of those units and then you go, okay, great. I bought it at 1 million dirhams. I'm now going to sell it for 1.2 million dirhams and I'm going to make my 20%. Great. The problem you'll face is that the buyer who's going to buy it off you is going to have to come up with 30% or 40% or even 50% in order to get the NOC. Right. On top of that, they're going to have to pay you your 20% premium. So they're now sitting at 700,000. Plus they're going to have to pay 2% agency fee and 4% DLD fee. So they're now sitting at 760,000, right? Now, what's also going to happen is that if you bought in building A with the idea of flipping it, what's going to happen? The developer is going to go, hey, that was successful. Let's go and do building B. Copy paste. Right? Now, the developer naturally is not going to do it at the same price because it was so successful. They're going to bump it up, but they're going to bump it up to 1.2 million. So now all of a sudden, if that buyer is coming in and they go, okay, I want to buy one of these units and I'm happy to pay 1.2, they're not going to buy it from the resale market. They're going to buy it back from that developer again in building 2. So this whole, way in which brokers kind of sell this idea of flipping, I just haven't seen it play out enough. I remember doing it when, I was there when the Address Boulevard launched, right? And my dad bought a unit and we sold it a month later and we made like 150% on our money, right? Great. But we're talking 2012, 2013, people who bought Blue Waters at the launch, right? Where they bought a 3-bedroom at 4.3 million. Okay, yeah, they could flip it. But I think in the market that we're in today, I don't really see that flipping playing out.
So let me rephrase the question now.
Okay.
The question is from the developer's perspective. Do you think developers are riding this wave? So do you think developers go with the idea that, look, I'm going to sell this at a million and I'm going to sell this product out. So let me make it very ticket friendly because my second product will anyway be 10% or 20% higher. Do you think developers are approaching the market with that mindset of actually going, okay, I'll do 3 buildings or I'll do 1 building in 3 phases? And every phase I'll increase.
Yeah, of course, 100%. I mean, and they have to, right? You have to, especially if you're a relatively new developer, but you have to give buyers, they're taking a risk. If they're buying from you, your first project in Dubai or your first project in this area or maybe a new concept that you're launching, you have to give those early investors the chance to kind of feel like they're getting more value than the people who came on later. They have to do that. And the other thing as well is a big mistake that I see a lot of developers make is that they think that they can achieve the same prices that established developers can make.
Right.
And that's just not possible. You couldn't go out and design a beautiful watch and expect to sell it at the same price as a Rolex, right? A Rolex has been there, they've established their brand, they've got their customer base, they've got their distribution. The same thing applies to real estate. Every developer you meet, they all say the same thing. I'm sure you're going to agree with me. We want to be the next Ellington.
Oh,
right? It's like the common thing.
Yeah.
But what they don't realize is that Ellington started in 2014? Right, selling buildings in JVC.
Yes.
They delivered a good Belgravia, then they delivered a good Belgravia 2, Belgravia Square, DT1, Kensington Waters, blah, blah, blah. Right? They've been building up this track record for the last 12 years. You cannot come and say, hey, I'm going to use the same architect or I'm going to use the same materials or whatever as an Ellington and expect to achieve the same price points.
And Ellington didn't have it easy with Belgravia either. It took hard times.
Yeah, exactly.
Yeah. Okay, segment 3, smart money versus fast money. What does a smart investor do differently in today's market? And let's talk this post-crisis or during crisis market.
I think a smart investor today, like I said previously, they don't rush, right? They make sure that they really look at all the options that exist in the market. And, they don't necessarily take the broker's word for it. They try and build out their own case study as to why this is going to be successful, right? Okay, a broker might be saying, okay, you could buy this for 1 million, you could rent it out for 80,000. Okay, under what conditions? Explain that to me, right?
Right.
And I think what's the good investors are doing is that they're questioning those claims and they're going out and doing their own sort of due diligence to figure that out. And that's what I feel like you need to be doing in this market. But even before the conflict, it was exactly the same thing.
Okay. Yeah, so that is universal, I think. And what's the biggest mistake you think people make when they move too fast, other than burning their money?
I think I've met so many investors that I speak to them, and they'll come to a company like us after the fact, and I'll ask them the question like, why did you buy that property? And they won't have like a solid reason.
Next question. There are still people who are able to double their money. Okay.
Yeah.
What's the difference between them and those poor souls that just make 5-6%?
I mean, look, if you are going to find those kind of properties, you need to be getting in super early. I'd say step one. You need to be, making sure that the agents that you're working with have very good relationships with certain developers so that you can get that early access, right? And you can get the right kind of units. That's another thing, because again, when that real end user comes down the line, they're going to want that unit with the biggest size, the best view, whatever it might be, right? So I think those are things that are really, really critical in identifying those right opportunities. If you come later down the line and you get left with the scraps, or you end up buying phase 3 or phase 4, your chances of kind of making any reasonable return on it versus the people who bought early on is going to be very difficult.
So, to that point, is there any one single mindset shift that you think investors should make right now?
Look, it just came to me now, but one of the things that I would actually say is investors need to start really considering private developers a lot more than just the big boys.
Right.
I think we've been here, right? We've seen new developers come in with serious amounts of money, serious ambition, willing to sell at a very attractive price, especially early on.
Right.
And if you recognize that they have all the fundamentals right, like they have the overseas experience, they own their lands, they have the right kind of understanding on the right kind of units to build with the right payment plans and so forth. Mm-hmm. What I've actually seen is that a lot of you can end up buying something that is clearly priced lower than what the rest of the market is. If you get in early with those kind of developers, and then the rest of the market catches up and starts to realize that, hey, this developer is doing something really great, you can actually really do well out of those investments.
So you think they can time the market probably?
I think it's timing the market, but in some ways also timing the developer.
Right.
Right. Recognizing, okay, wait, these guys have the right.
And so Sam, the key to that is basically having a reliable broker and staying committed to one broker, you think?
In many ways, right? I mean, yeah, we all know that there's so many brokers in this market, and so many agents will just sell you whatever it is that's going to pay them the most commission. But there are some brokers that do provide genuine good advice. And if you find that kind of broker, you should work really closely with them. You should really open up to them and really explain what is it that you're trying to achieve out of this development. What is it an absolute non-negotiable for you? But what is it that you're really striving to achieve? And then guide that broker into helping you find that perfect investment.
Awesome. Okay, we go to the next segment, which is called the policy play. Now, of course, the first thing and the biggest thing is the UAE deciding to exit the OPEC and OPEC Plus, right? You think this is going to make UAE more economically independent, or you think this could end up like Brexit?
We don't know, right? But one of the things that I think has started to happen recently is that the UAE has found itself in a position where the geopolitics that's taken place surrounding it is starting to have an impact on the UAE itself. And by certain alliances that it has had and then it hasn't had, it's kind of ended it on one side of a conflict or on another. And fundamentally, I think we can all agree that what makes the UAE, and in particular Dubai, very, very attractive is its position as a safe place for people to invest their capital within a region that has a lot of exciting things going on, but in some ways, some instability.
Yeah.
So it really does want to position itself as the Switzerland of the Middle East. And it's done a very, very good job of that in the last, say, 50 years. A move like this kind of, to me, it signals that it kind of wants to have that independence. It doesn't want to get, if Saudi decides to do a move within OPEC that's going to have an impact on the global oil position, the UAE doesn't want to have to align with that just because it's part of OPEC. Maybe it wants to be independent and make its own decision. So for me, that's the statement that I'm getting off the back of that. And I believe that this country is extremely well run. So if they're able to make their own decisions, I think they'll tend to make the right decisions. So I generally would see it as a good thing.
And does this mean that also UAE is trying to decouple itself from being purely oil driven? And there are other energy sources that it's exploring?
It's been doing, in particular, Dubai has been doing that from an extremely long time ago. In fact, a very small part of Dubai's economy is now dependent on oil. And obviously Abu Dhabi has got a lot more oil than Dubai has. And maybe this is Abu Dhabi's idea of, okay, let's move away from that dependency and let's find other avenues to have a sustainable economy. But as I said, I mean, be it, my dad worked for Emirates Airlines, and Emirates Airlines was established in 1985, I believe. Mm-hmm. So it's now 40 years in the making. So, and the reason why they wanted to build Emirates and Dubai International Airport is because they wanted to have an international hub. Right? They wanted to be able to bring people from India, from Australia, from the UK. And they've been doing that for the last 40 years. And today, we all know that Emirates and DXB International are such important pillars of Dubai's overall economy. So yes, this could be a move in that sense, but that wouldn't be a new thing. That would just be a continuation of what they've been trying to already achieve for 40 plus years.
And how do you see it impacting real estate, our industry?
Too soon to tell. Honestly, if I gave you an answer right now, it would be pure speculation. I don't know. I think what the news came out yesterday.
Yeah.
I think we're all probably still trying to make heads or tails of it, what's behind it. But I think one of the things I will say is that it's very, very clear that the government right now is really paying close attention to its own economy and what it needs to do to provide that confidence in its economy, be it real estate, be it infrastructure, education, whatever, right? Because as soon as this conflict took place, they immediately started introducing measures in order to provide that confidence. Right. I imagine that in the next couple of days, someone will come out and explain what the logic is behind this move. Right. And there'll be some strong rationale behind it, and we'll sort of all buy into it. And I'm just very keen to hear exactly what that is.
Great. And we're all waiting for it. Now, another thing that has happened is this investor visa shift, right? So this 2-year investor visa now, 750,000 is no longer the minimum cap. And 2 joint buyers buying a property, as long as each of them has a share of 400,000 plus, they still get the investor visa. Now, do you think this is opening the market to a completely new set of buyers?
Yeah, absolutely. I mean, 2 million dirhams for a lot of people in Dubai might not sound like that much money, but you're still talking about what, like €500,000, right? $600,000. It's not nothing,
right?
Real estate in most of the world doesn't come close to that kind of price tag. So I think giving people the chance now where 2 people can get together and they can each, put 400,000 dirhams, and they can buy a 1-bedroom and rent it out and generate a healthy income. And off the back of that, they can get a property visa, which they can then renew upon expiry. I think that does really, especially in certain markets, like be it India or Pakistan, I think that's going to be really, really interesting to them because suddenly they've got access to getting that visa in Dubai.
And another interesting thing is because in this visa, you still have to visit, I think, the country once in 6 months. Do you think this is a only real estate move, or you think this is a population strategy as well?
It could very well be, right? It's a lot of Dubai's economy depends on bringing new people in, right? So many other places in the world are so are so scared of immigrants. Here, it's like, this is what they want, right? And, you know, given the situation that's happened with Iran, I think one of the big questions that we all have is like, okay, are we going to see the population growth that we had expected to see? And so maybe, as you said, maybe this is a slight move that they can make to make sure that those numbers do hit, and then the supply of real estate that has been already being built starts to be absorbed as well.
I mean, look, it's very interesting because, you know, when you look at it, UAE is gaining global independence, but at the same time, it's opening doors to more investors, possibly a mass segment rather than purely a premium segment where we saw Dubai going, you know, a few months back. Segment 5, where is the market accelerating? Okay, the question, where is momentum building before it hits the headlines? What micro markets, in your opinion?
So I mentioned it previously, right? I think what you have to do is you have to recognize where is the demand today, and then you'll find out what the market wants. The demand that exists in the market today is the local market. It's people who live here. What do people that live here want? They want ready property, step number one. They want mostly townhouses and villas if they're able to afford it. If they can't afford that, then they want well-located apartments at very reasonable price tags. So what we're seeing in our business is that townhouses or villas in established communities like Springs, Lakes, Meadows, Arabian Ranches, those kind of areas, you're starting to really get a lot of inquiries off the back of that. The other areas where leads are really starting to pick up, but only in the last, let's say, week or so, is in like apartments in JVC. Ready.
Okay.
Ready apartments in JVC. People, you know, looking for that 1 million price tag, maybe 1.1, sort of quite price sensitive. But, you know, for them, maybe their rental renewals are up or whatever, and they're thinking, okay, yes, I could go and get a cheaper rent right now, or I could really capitalize on this situation and I could go and buy something today at 1 million, which would have been 1.2 million just a couple of months ago. Those are the two areas I feel where we're seeing the biggest shift at the moment.
That's very interesting, and perhaps that needs an episode on its own. You know, okay. The flip side of it, what areas do you think or that remind you of the next downtown or the next Dubai Marina?
I'm a big fan of Dubai Hills and Dubai Creek, right? Two Emaar developments. Dubai Creek is huge, right? It's got so many buildings still to come, but I love the master communities that Emaar does. And even today, I think it's a very enjoyable place to live. And I think you could say a very similar thing about Dubai Hills as well, right? With the Central Park, the golf course, the mall. I think one of the things I believe will happen a lot more as Dubai grows as a city is that people will be a lot more focused on community living than just what sort of tower or property that they have. And I believe that developers need to be very wary of that. They need to understand that, yes, you could have an amazing building, but you have to make sure that that building is situated within a community that has a lot to offer as well. So I would, those have been like, Dubai Creek and Dubai Hills Estate have been on people's radars for a while now, but I would continue to say that they remain two of the most exciting developments for the future as well.
Okay, and the last question in this segment. So this is mostly retail money that's moving. Where do you think institutional money is moving? So for example, plots or next big developments. Which areas do you think it's moving in?
I would imagine that a lot of it is probably going to be heading towards the new airports, right? I think there's a lot of exciting stuff coming up in Dubai South. One of the things which I believe will happen over the next 20 years is that you're going to start to see Abu Dhabi and Dubai kind of start to become connected. You know, you've even got developments like Bain by Aura, which sit right on the border. In fact, it's closer to Dubai than it is to Abu Dhabi, even though it sits within Abu Dhabi's borders. And I believe you're going to start seeing more of that coming up, right? Where you've got Lunaya, right? Which is by Zaya, which again is in Dubai, but you know, it's situated right in that zone. Very, very popular, sold extremely well. I think that's going to be an area which is exciting, and off the back of that, I think a lot of the institutional capital will flow into those areas where the potential for real growth is quite high in the years to come. I think commercial space is another one, right? one of the big issues that we've all faced is that most of the commercial space that has been built, particularly in office space, has been constructed pre-financial crash. There's been very few buildings that have been developed post-2008 in the commercial space. But obviously, since COVID, we've seen a huge uptake in commercial licenses being issued. All of those businesses, they need offices to rent. Those offices don't exist. We rented our office in the Onyx for 95 dirhams per square foot. This year, same kind of offices have been renting for about 350 to 400 dirhams per square foot. That's a 4 times an uplift. And so I think what's really exciting now is that people who are able to do new commercial buildings, they are going to see a huge amount of demand from businesses like mine that are good businesses, SMEs, 50 to 100 people. Yes, we would love to have a grade A office like a Lumino or Now or whatever, but the reality is that what we need is just basic good office space, and people who can develop that kind of space and then own that kind of space, they can get some fantastic yields off the back of that. So I wouldn't be surprised if a lot of the institutional money follows the commercial space.
Great. So I'll actually start my next round with that, but the next round is basically a new signature round that we have created, which is basically called accelerate or eliminate. Okay. And it can be controversial, but you have 2 seconds to answer every question, no explanations.
Okay.
Okay. So the first question on that, okay. Commercial, large buildings or boutique? Accelerate or eliminate?
So I have to pick one of the two?
Yeah. Commercial, okay. Let me split it.
Yeah.
Commercial, boutique. Accelerate, eliminate.
Accelerate.
Okay. Off plan. Accelerate, eliminate.
Eliminate.
Ready property.
Accelerate.
Branded residences.
Eliminate.
Short-term rentals.
Eliminate.
Dubai Islands.
Oh, shit. Eliminate.
Rack.
Eliminate.
High yield place.
High yield place.
Okay, let me flip it. Flipping.
Eliminate.
Ultra luxury.
Eliminate.
Buying in 2026.
Accelerate.
And that's it.
Okay.
So, good segment, simple, yeah? I wish the podcast.
I think the eliminate is the wrong word. I would have gone with like decelerate, right? So okay, because a lot of these things like take Dubai Islands, as an example. It's a very interesting area, right?
Yeah.
We've all been very active there. We've all sold a lot of real estate there. I think the long term of Dubai Island is positive, but I do think the next year or two will be challenging. So I wouldn't say eliminate. If I'm assuming that the questions are like should you be putting more money into it, more effort into it, blah blah blah. I met with a developer this morning. This developer has got plots in DLRC, DIP, Jadaf, and Dubai Islands, right? And I said to him, right now, Dubai Islands is not the place, right? Hold the land, keep it, come back, let's have a conversation in a year's time, where some buildings have started handing over and this is all far behind us, right? So I think it's, people have to sort of understand that areas, they have momentum and then that momentum shifts. And right now, the demand for a Dubai Island is going to be challenging. So again, I'm still optimistic about it, but I would be putting a bit of a dampener on it.
Fair. Last few questions before we close. Are most investors entering Dubai today going to make money, or you think they'll learn expensive lessons?
I think they'll make money.
Are branded residences the future or the next bubble?
I just think they're overrated. I think, honestly, I don't get it. Like, what do you get? Like, I don't think anyone can explain to me. You get a logo on the top of your building for 10 years. It differentiates your product. I think it helps the sales team. But from an end user perspective, what does it do? You don't have any extra amenities. You don't have I think it's a marketing hack that too many people have fallen for.
Is Dubai still early, or you think already crowded?
Long term early, right now crowded.
If someone invests tomorrow, what's the one thing they absolutely must not get wrong?
They cannot afford to not consider their worst case scenario. I always give this piece of advice. Imagine the worst scenario possible. Can you manage? Right? So imagine another COVID. Imagine the situation with Iran, whatever it is. If that happens, are you going to be forced to sell? Are you going to be distressed if you lose your job? If the answer is yes, don't buy. If the answer is no, buy.
So I think this is the best time for anyone to get an answer to this situation, to this question.
Yeah, they're living it, right?
Yeah.
They're feeling it.
So anyone, and generally to wrap this up, I think anyone who enters the market today will know that in the worst case, this is where I will enter, and this is what I can afford, and this is what I can live with.
Yeah.
Okay.
That's it.
That's it. I think the summary is that instead of accelerating, get some clarity.
Yeah, absolutely. Absolutely. I think, the next couple of years are going to be a really, really good time for Dubai real estate, not because we're necessarily all going to make the same amount of money, but it's going to be a period of consolidation, improvement. We will have a healthier market coming out of this. And that needs to happen sometimes. You need to go through these cycles, right? If things are constantly positive, everyone can enter the market. Everyone can just, buy a plot and put up a building, and it leads to the wrong kind of behaviors, right? These kind of corrections, these resets, really help a market become the best possible version of itself. So I think this is an important time for Dubai.
And I think that's the best note to end on.
Good.
Right? Sam Picks. Thank you so much.
Thank you.
Taking the time.